So Netflix is actually down over 40% from its all-time high, and there's a big reason for that. We're also going to dive into the full analysis and whether or not this could be a buying opportunity or time to just get out while you can. So the main reason that Netflix stock is down right now is because of the uncertainty of their acquisition of Warner Brothers. While this is a huge acquisition, obviously very expensive, but also they are going to get the rights to some of the biggest characters and franchises that fans know and love. Well, the problem is that people, even though it sounds bullish, it's one of those things where it's so costly that they don't know if they can actually profit enough to really justify this deal. They also provided some weak 2026 guidance and margin concerns that basically fell below market expectations. They've seen slowing growth, high valuation, again, a very expensive deal that puts added pressure on them. So they are actually having a little bit of a rebound today. They're up 3.09% today, but if you look over the last 5 days, they are still in the negative. So you can see right here a huge drop on Tuesday, January 20th. They did in Q4 2025 beat on EPS by 1.5% and on revenue by 0.7%. Over the past year, they are down 12.56%, which is not great. They are also only up 52.37% over the past 5 years. Again, they are far from their all-time high, which was around $132. They also don't offer any sort of dividend, so it's not usually one you would want to use to just hold and collect money from if you're maybe trying to get some sort of added retirement or something like that. So a lot of people that would invest in Netflix are probably younger, maybe middle-aged, and looking for high growth stocks that could get them a really nice return on investment over a longer period of time. PE ratio is 34.07. So a lot of people would call that a little bit high. I've seen much higher, but it also depends on whether or not the stock can get enough growth to justify that, because you can't just say, well, PE at this number or higher is always bad and you should never buy anything at that PE ratio or higher. I don't really go about things that way. Now, we do have another PE ratio. So I just showed you what is essentially Google's version, which is the forward PE ratio. Well, the trailing PE ratio, which sometimes is quite a bit different and a lot of times is very similar, is on Robinhood. They actually have a 46.46 PE ratio, which obviously is significantly higher. I also like to look at their past 3 months of a stock just as another small little indicator. Doesn't mean much by itself, but over the past 3 months, they are actually down almost 24%. So that's a pretty rough quarter. If you look at their price to book, it's at a 13.28. If you look at their return on assets, the return on assets is decent, and their return on capital is also decent, both being in the double digits and well over the 10 or 15% that I would normally look for. If we look at what others are doing with Robinhood and seeing, okay, what are customers, hedge funds, and insiders doing here? Customers here lately have been buying Netflix, as you can see, which has also led to that surge over the past day. As you can see, up about 3% in the past day. And then if you look at what hedge funds are doing, hedge funds actually bought quite a bit in Q3 2025. Obviously, that was a while back before a lot of this news broke and before the Warner Brothers deal. But before that, a lot of selling for the most part from hedge funds. If you look at insiders, this doesn't always mean much, but it's interesting to look at. They've had 5 informative sells of 5.4 thousand shares in the last 3 months. Now, this goes monthly instead of quarterly. So if you look at January, they've had 57% buy, 43% sell. December, 50-50. November, I mean, you're not really getting much of a trend here in general. If you look at analyst ratings overall for Netflix, they still have a buy rating at around 67%, a hold rating of 27%, and a sell rating of 6.3% out of 48 Wall Street analysts. So if you look at the chart here on their earnings, this can kind of put some things into perspective on the last few months or the last couple of years of how they've done on estimates here. So they've beat mostly on estimates here on all of these except for Q3 of 2025, which was a huge miss. Another thing I like to look at that's an alternative to the PE ratio to kind of get an idea of the value of it at the moment is the PEG ratio. So this also adds growth into the mix, and this is on NASDAQ's official website. They give them a forecast 12-month forward PEG ratio of a 1.48, which is actually pretty good. Now, if you look at their EV to EBITDA ratio, this is another indicator, a small indicator you can use as an alternative to a PE ratio. For Netflix right now, they have 11.89, which doesn't seem too high, but you also have to compare it to companies in their industry. So with the media diversified industry, it's actually still ranked worse than 67.04% of 719 companies. The industry mean actually is 7.81 versus Netflix's 11.89. I also like to look at what the leadership could be like at the company I'm looking at for their stock. I like to know, well, you can't just go buy off of what they say on TV and things like that. Now, what I determined as a good way to figure out if they may have good leadership is what do the people that work for them say. Glassdoor, in my opinion, right now is the best place to figure that out. You can also check Indeed as well, but I think Glassdoor has kind of overtaken Indeed for the top place for employee reviews. Now, they have a 4.1 out of 5-star rating, which is really good. And 81% recommend working here to a friend. That's also very good. Now, the CEO approval also is a good indicator of whether or not their leadership is good from people who have worked for them. They have a 73% approval rating of the CEO, also a very good score. So leadership, if you look at the indicators from employees, seems to be good. Now, unfortunately, when I factor all this stuff in and all these different indicators, Netflix, I actually have them as a sell right now. This is not financial advice. I just think that the trend is probably not going to turn around anytime soon to where I would see this as, oh, well, this could be a time to buy it low. A lot of people are going to say that. A lot of people on social media, Reddit, etc. But in my opinion, again, just this is for my situation. I like to invest for growth right now. And I just wouldn't buy Netflix right now. I don't own any Netflix stock, and if I did, I would probably sell it, or I probably would have sold it a long time ago. But right now, my indicators just don't look too good for this, even if it is, to some people, a buy low scenario.